Good morning, ladies and gentlemen. Welcome to today's webinar, Real-Time Daily Trading Ideas. 5 days, 5 traders. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Many of you will probably have seen it a couple of hundred times, but it is of high significance, so please be aware of it. The risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. If you are unexperienced with our products or trading in general, please do get started with a demo account. If you have any questions about the demo account or the software or questions in general, just give us a call and we will be there to answer all of your questions. Okay, this is the schedule for the week. Today it's Paul Stone. And most of you will probably know the reasoning as to why they're trading with us, but just as a reminder, we do offer very good spreads, very competitive spreads in indices and Forex. All right. Enough of me for the moment. Let's see what Paul is saying. Just give me a second. I'm passing over the screen to you right now, Paul. Can you hear me, Paul?
I can hear you. Yes,
Perfect.
I can hear you.
All right. Okay. Now we should be able to see your screen. Yes.
Fantastic.
Perfect.
Yep, fantastic. Excellent. Thank you. Thank you for the introduction. Good morning, everybody. Hope you can see my screen. Hope you can hear my voice. Here we are, Tuesday, 16th of April, with the real-time daily trading ideas for Admiral Markets global audience. Today, of course, we are into sort of a period here, certainly in Europe, of the Easter holidays, and markets tend to go very, very quiet during that period, and I'll show you some examples of that as we go on. For once, you'll be pleased that I don't have any sort of long pieces about Brexit to do, and that will become apparent in a moment when we look at sterling. But looking at what we've got going on today and over the next couple of days, as I said, whilst it is really a quiet week during this period, there's still some interesting news coming out. We've got to really have a bit of a week of CPI news coming out as the week rolls on towards Friday. This morning and around about now, we've got the German ZEW survey and also the Eurozone ZEW survey. And we might see an impact on that in the DAX when we look at it in a moment. Later on, we have New Zealand's CPI. Tomorrow morning, we've got Chinese GDP for both Q1 and year-on-year. People will be taking a keen interest on that to see what, if any, impact that has, A, on markets, and B, on the ongoing trade negotiations. And then tomorrow we also have the UK. In the UK, we have CPI, and also in Canada. We'll also have Mr. Carney. He's supposed to be, I believe, in Paris tomorrow speaking, although those kind of comments may be perhaps a little overshadowed by the sort of tragic events of last night in Paris. And then on Thursday, we've got sort of Aussie employment numbers. We've got sort of credit conditions in the UK, which people take an interest in. And then we have US retail sales in the afternoon. And then on Friday, we will have Japanese CPI. So, as I said there, we've got New Zealand, sterling, Canadian, and Japanese CPI numbers. So, of course, people will take an interest in that. But of course, as I said, it'll be a little bit quiet because most people are away from their desks at the moment. As I said, I don't really have anything to talk about in terms of Brexit, and I'll show you how that reflects in the markets, okay? But, you know, as always, I want to have a quick look at what's going on. So those of you who joined us before in the past will know that I'm always very big in talking about, you know, I want to be identifying where strength and weakness is within the FX markets. And so, you know, every weekend I do a little bit of work on my own analysis to build a picture of that and just build my own spreadsheet of data around that. And even though I now have plugins that can do it for me, I actually still like to do it by hand. I find that when I do it, I have to do the analysis. It basically gives me a better connection with the market. Turns out I have my sort of view of the market, my understanding of the market seems to be better. And what I'm kind of curious here to see is that despite all the shenanigans, sterling is still holding up. It's still holding up as the one of the top two, with the US dollar here still at the top of the pile. What kind of interests me is that both Japan has collapsed to the bottom of the pile, as has New Zealand dollar. Okay, the both of which were very strong only a month or two ago. So we've had dollar and sterling at the sort of the top of the pile, and then we've had effectively Japanese yen, Kiwi dollar, and also euro. Okay, euro at the bottom of the pile. So just bear that in mind when we have a little look at some of the FX pairs. To, as I said, we always want to be looking at where possible to try and sort of buy strength and sell weakness, and that will show us when we look at the charts. As I said, there's very little for me to talk about in terms of Brexit. Why is that? Well, of course, most of it is that the politicians in the UK have given themselves a nice couple of weeks Easter holiday. It's fine for everybody else to have to work through it and to have to deal with the kind of ongoing lack of clarity regarding Brexit. But you know, it's important for the politicians to have their Easter holiday, so it's very nice for them. But of course, that has an impact in terms of there's very little news coming out, all right, about it, or very little discussion, and that has a knock-on impact into the sterling pairs. And what I've got here is this is a profile for sterling. If you want to know, if you're very new to trading, okay, and want to understand about how we set up profiles, well then we've been covering that on the Mastering the 4 M's of Trading webinar every sort of Monday afternoon, London 4 o'clock, also in the YouTube Admiral Markets archive, as well as the Admiral Markets Global Facebook page. And I'll show you about how we set up profiles, okay, on the MT4 or MT5. And here we have one for sterling. So if I just move this piece here, we can see I've got here pound against dollar, euro against sterling, pound against Canadian dollar, pound against Aussie, the pound against the Japanese yen, pound against the Swiss franc, pound against the New Zealand dollar, and the FTSE domain UK index. And what I'd like you to know is this is all the weekly chart. And if we look at here, we've got the pound against the dollar. We have, this is the weekly chart. So actually you can see for last week, what we've had is inside bars. Okay, we've had a collection of inside bars. There's a compression going on. Okay, there's we can see that the pound against the dollar. All right, the pound against the Japanese yen. Last week's bar is inside the range of the preceding bar. Same for the pound against the Swiss franc. Same against here for the pound against the Canadian dollar, and also for the pound against the New Zealand dollar. And even the ones that didn't have it, so like euro against sterling, even pound against Aussie, they were quite small bars, and it just gives you an indication of that as I said, as the MPs have all gone away on holiday, effectively the sort of market activity has also dropped significantly as well. But we covered inside bars on the Mastering the 4 M's of Trading webinar. Okay, as I said, you can find the particular session in the archive, and we talked about how inside bars, it's like the human body. Okay, the human body, we surge, then we rest, we surge, then we rest. And the market reflects that in an inside bar, and that's what we're seeing on sterling. Okay, and the market is resting. Okay, it's been a rather volatile few weeks. You can just see that even just from the pound against the dollar weekly chart. You can see there's just been a volatile for the last few months, not unsurprisingly. So the market is now taking a rest, and then once politicians come back, okay, from their recess, that will and the sort of the shenanigans start up again in full force. Well, then invariably that will have an impact upon sterling and the financial market. So at the moment, sterling is just going to be very, very quiet. Okay, it's going to probably be very relaxed for this week and probably next week as well. And so it gives us a chance just to, as I say, just to take a rest before the next surge happens, because we know that next surge will come once the politicians come back, and it gives you an indication of how sterling as a market is completely driven by sort of by sentiment, by political sentiment at the moment, regardless maybe of even the technicals, regardless of even the fundamentals. Okay, it's being driven by the sort of political shenanigans that have been going on over the last few weeks. So time for us to take a little bit of a rest there with sterling, which some of you might be very pleased to take after sort of the weeks and weeks of being batted back and forth. So that leads us on to our kind of next big pairs that that we look at. Remember what I was saying, that dollar and sterling have remained strong. Euro, yen, Kiwi dollar had been weak. So let's see how that plays out in the actual charts, the charts backing that up. As always, I want to have a quick look at the dollar index. Okay, it's the big daddy, so to speak, of FX of the FX pairs. So I want to see, it's nothing's really changed that much from last week when I talked about it. I see it, this period there that we are just really sort of just knocking about between about 95 and around about 97. That's what we're there. I don't see any real particular clear plan there at the moment. It's just we're just and if I go down to the daily chart, some people are saying, well, maybe this is a bit of a head and shoulders pattern here that's building on the daily chart. Perhaps what I'm still seeing is that 200 period daily moving average is still grinding its way north. It's still been acting as dynamic support. 97 up towards 97 has been acting as pretty significant resistance, and so there's a little bit of squeeze there. We've also got the daily 50 acting as dynamic support at the moment. So we're just getting squeezed and squeezed. Okay, it's as I said, it's a little bit of the rest. Okay, it's the rest before the surge, and so it's a case of I don't see a particular trade there myself personally. Okay, it's just a case of just watching to see what happens over the next few days and weeks, okay, as the markets start to wake up after the breaks. But what I do start to see is if I have a little look at the euro dollar, okay, so we talked about this last week, and we've talked about it for the last few weeks. Descending triangle there we had on the weekly chart, and as I said, for those of you completely new, just very, very simple chart setups, green bullish, red bearish candles there, okay. We have a 20 simple, a red 50 and a green 200 period moving average, just drawing in significant levels of support and resistance in any particular patterns or trend lines that may be of relevance to us. We've talked about it quite a lot. Descending triangle, 113 acting as a support, and we can see that over the last few weeks we've got beneath it. If you remember last week, we talked about on the daily, we talked about last week when we hear about how price, we'd made our new lows there, okay, and back in sort of start of March, but we've been drifting back up, and I said that last week, I wanted to wait and see how did price react when it got back up to this area, okay. We've got the 113 level, which has been a pretty significant support resistance level. We've also got the daily 50 period moving average there, and hopefully you can also see the price action there at the moment is, it's not exactly filling us with bullish confidence, shall we say. Now, of course, it could be taking a little bit of a breather, but I'm seeing that at the moment that, there's been a little bit rejected there. And if I go down to the 4-hour chart, okay, 4-hour chart doesn't, isn't beautiful, but what I'm kind of interested in is that, if I just draw this here, is that, we have, I'm looking at here on the 4-hour chart, this is a key reversal candle, okay? So if you want to know more about it, they're covered in the Mastering the 4 M's of Trading webinar. We've got up to the 113 level, and then we've put in this key reversal bar. During that period, we pushed to a new high on Friday, but then actually rolled over and closed beneath the low of the previous session. And then, this week, as you can see, we've just really sort of knocked about a little bit in that, we've just, it's just sort of dilly-dallying around. But for those of you who have got looking at a swing trade on a longer position, well, we'd be looking at being around about the 113.10 area, stops above the recent high, so around about 113.27. So in terms of our trade risk, we're only risking about 17 pips of trade risk, which is is admirable. And then if depending upon your particular risk profile, we're really looking back down towards around about that 112 area where we've seen there back in earlier April. So suddenly we're risking around about 17 pips for about 110 pips of profit. That starts to give us quite a nice, just over 6.4 reward to risk ratio, and you can see that's already starting to sort of take off there a little bit this morning. So that's the good trade there. Your first inflection point would naturally be around about the 50 period moving average, 112.67. See how price reacts there. But if it goes through and continues down, then I wouldn't be surprised if we may see us drift back down towards about that 112 level, giving us quite a nice longer term swing trade. So just keep an eye on that and watch that as we go. So let's go to one of our other very popular trading instruments here. We've got here at Admiral Markets, we've got the DAX, and what we're seeing if the weekly chart, okay, it's just been drifting north, okay, drifting back up to that 12,100 level we talked about last week. It seems to see it's just been nudging its way up there quite nicely. A lot of that being dragged north by basically, the sort of the American indexes, which we can take a little look at in a moment. If we go down to the daily chart, it's just hitting that resistance level that we've seen before. If we look at, last week we talked about it, frustrating last week. We talked about getting long here, okay, last week as we started to see a surge back, and fortunately we were washed out, but then we got a second chance to go again, and as you can see, our target from our trade last week is where we've hit this morning. We've just rallied our way up there, and then I was looking this morning was, how was price reacting at that particular level? And if I go down to the charts here, down to the 15 minutes, okay, you can see there's been a reaction there, probably off the back of that ZEW news. We had a nice here, okay, nice double top there, a little bit of a false breakout. You can see that level was significant, and we've rolled over and fallen away there, okay, this morning. I was hoping it'd be a little bit slower for us, and we might be able to get the sort of a short trade there about 12.102, 12.101, but we can see that price is already sort of off the back of that news. It's drifted away. And if I just take a quick look at the 1 minute chart, I was kind of interested here just this morning running into the news to start that how the 20 period moving average was acting as sort of significant support, and then it dropped, and then we were having to use the 50 period moving average as support, which is showing us signs that the trend was weakening. Last little pop up there, okay, bit of a false breakout, and what can we see? We've just fallen away, rushed up back up to the 20 period moving average, and just dropped away there, okay. So unfortunately we're just probably a little bit late for that this morning, okay. We're just looking to sort of see that off the back of that news, but I think that we might see a little bit of a drift down there this morning for the remainder of that session, down to around about 12.75, okay, and then that would be nice. So if you've been watching and you'd seen that sort of double top and false breakout, well played to you there this morning. That's just a little bit ahead of the pack for the rest of us. So we'll just have a look at a couple of the other ones, okay. So we've got gold here. Gold, you hear me talk about how we've sort of reversed off our sort of bearish order block here, and how we were building a sort of head and shoulders pattern here. Talked a couple of weeks ago about this, once again, this big weekly key reversal. We just keep making lower highs, and what I'm curious about, if I go down to the daily chart, was I wanted to see, will price drift back down to around about this 1280 area, and that's where I'm going to be looking to see. Okay, that will be my decision area for myself. How will price react there? We can see the last couple of times it's been down there, it's actually had a bit of a bump up there, and so I'll be looking to see when it gets down there, how does it react there? Does it put in kind of double bottoms here like this? Does it put in 1, 2, 3 patterns, in which case there might be a nice swing trade, okay, back up towards that 113 level. So just to add this to your watch list. I think it's a case of just seeing how that develops over the next couple of days, okay. It might take a couple of days, okay. It might actually be into early next week before the sort of trade gets down there and reverses, based on the sort of the lack of key players at the moment. But it's definitely something to sort of keep an eye on, your add to your watch list at the moment. With regards to Bitcoin, okay, we talked last week about how there might have been some life breathed back into Bitcoin. We saw that we had the break of the long trend line. Okay, we had a big bump there. Okay, just above 5,000. We said that we were looking to see could it hold above 5,000, which is what it has done so far. It's by the skin of its teeth. And I'm saying that actually I personally want to see us get above 6,000. So to give me confidence that we were the start of a possible new bull trend, not just a case of flushing out the kind of the sort of the last people here. Okay, so nice move if you traded that, play to you. But personally, I'm just adding that to my watch list to see can it get above 6,000. Okay, that will be then for me to start to get seriously interested in Bitcoin. And just to finish off, I'll do a little bit on oil because I've not touched on it for a while. Let me just make this chart a little bit clearer. Just one of my older trades just running there, still just chugging away. Come back to that, show you that in a minute. But here on the weekly chart, it's just it's ground its way up here. And we talked around about here about the weekly 50, around about the kind of 63, 50 area. And not surprisingly, we've got a little bit of a reaction there, okay, at the moment. Just a sort of a small reaction, and we'll have a quick look at that. The daily chart, okay, it's just, as you can see, it's just maybe topping out a little bit, but so we had a bit of a trade from there sort of last week that got triggered on the 4-hour chart here. That you can see we had just very nice run, and then once again we had a nice double top. That was also a 4-hour key reversal candle. We pushed to new highs, but closed beneath the lows of the sort of last 3 candles. And then, realistically, we were getting short around about 64.35. Okay, we were triggered and around about 64.75 stop. We had a target of 62.97. We actually got down there, but it just didn't trigger. It didn't trigger on the spread. Okay, which is frustrating, but that's trading, ladies and gentlemen. That's the way, that's the way it goes. It just needs to get down there to sort of recover the spread. So we're just watching to see, will that kind of continue to drift down there, okay, over the next couple of sessions. And if it does break that, could it break that? Well, could it actually make its way down to around about that 62 area, okay, in which case that might give us an opportunity to sort of, if you've missed the initial trade, to sort of take a smaller swing trade down there towards that 62 area. So they'll be just keeping an eye on that, okay, over the next couple of sessions, just seeing how that price reacts, because there might be the opportunity for a little sort of a shorter term swing trade on that. So I think we're just running up to out of time there, but I think there was a couple of questions. I'm happy to stick around for a minute or two and answer some questions if we have any to finish off the session today.
Yes, there is one question regarding the S&P.
S&P, okay, absolutely. Let's just find the S&P chart. Happy to do that. Okay, let's just, here we go. S&P 500 weekly chart. Okay, so it's been a fascinating chart. Okay, fascinating chart here. Hopefully you can all still all see it here. That that's the weekly chart. You can see that after the real, we touched on here in September and then in December, but you see it hits the 200. And wow, that's just been a rocket, hasn't it? This for 2019. And I thought we might have issues around about 2,800, okay, but the market just doesn't want to do it. 2,900, we're here, okay. And personally, I think we talked last week. It might have been last week about how we were back up to the sort of that high of early 2018, but once again we just sliced through it. And if I look at the daily charts, just put it down here, we can see that we're still just trucking north, okay, we're still just chipping away north, and my personal view is that I can see us actually sort of getting back up towards those recent highs, okay, of around about 29.35 to 29.42, okay. I can see us actually drifting our way back up there. I think these levels almost become like a magnet, and I can see us actually just drifting away there. And if you look at the 4 major US indices, okay, the Dow, the S&P, the Russell, and the Nasdaq, they're all pretty much doing the same. They're all on a bit of a tear there. Okay, if we look at the 4-hour chart, yes, we had a little bit of a dip, but didn't stop. Okay, and it's just carried on here as we go, and we're just literally just trucking our way north. We're just chugging our way north. And as I said, I think if we were to look at the other major American indices, I can see us actually going towards breaking those highs. Okay, there's probably an awful lot of sort of orders up around those recent highs, okay, of last year, those all-time highs, and I can see it happening there. And then actually we'll see how price goes there. So at the moment, you can, as a short-term trader, you might be looking to sort of trade the short-term longs, okay, to drift towards those recent highs. But I'll also be very, very curious, okay, to see how does price react when it gets back up towards those particular areas. I'll be fascinated to see what we see there. There you go. I hope that helps, and I wish you the best of success, in your own trading this week, ladies and gentlemen.
Thank you very much, Paul. Thanks for the comprehensive analysis. Thanks to the audience for listening. I'm sure you enjoyed today's webinar. If you would like to review it, you can do so anytime. Just give us a second to upload it onto YouTube. I wish everyone a good day ahead. Bye-bye.